What if a small stack of foreign currency tucked away years ago could still become something meaningful for your future? For many American veterans and families who follow this market, that question isn't abstract. It's personal. It's about whether patience, discipline, and a belief in a long-term outcome could one day translate into real financial relief. Today we're taking a clear, steady look at the Iraqi dinar, not through hype or rumor, but through facts, probabilities, and the kind of grounded thinking that protects people who have already sacrificed enough. Most dinar holders didn't arrive here through Wall Street analysis. They heard about it from someone they trusted, a fellow service member, a friend, a family conversation, or a late-night video that made the opportunity sound simple. Buy low, wait, and if the currency strengthens, the payoff could be significant. That idea is easy to understand, and it's powerful. But understanding the idea is not the same as understanding the path. The real question is not whether a big return would be nice. The real question is what would actually have to happen for that return to exist. Currencies do not behave like stocks or crypto assets. They are tied to a nation's entire economic system. Their value reflects government policy, central bank actions, oil revenues, trade balances, inflation control, political stability, and global confidence. For the Iraqi dinar to experience a major upward shift, those underlying conditions must move in a coordinated, credible way. That is a much higher bar than most online conversations acknowledge. It doesn't mean change is impossible, but it does mean change must be earned through real-world progress, not speculation alone. There is also a common comparison that deserves a reality check. People often point to Bitcoin or early tech investments as proof that small positions can become life-changing. That history is real, but the mechanics are completely different. Cryptocurrencies can surge rapidly because they are driven by global speculation and trade in highly fluid markets. A national currency moves at the pace of policy, stability, and international trust. Those are slower forces, and they are far less forgiving. So while big gains exist in financial history, they are not interchangeable across markets. For long-term holders, especially veterans who have carried this position for years, the emotional weight is real. Time can strengthen belief. It can make the outcome feel inevitable simply because the wait has been so long. But time by itself does not create value. Endurance is not the same as validation. A disciplined investor has to hold two thoughts at once. It's possible something could change, and it's also possible that expectations need to be adjusted. That balance is not weakness, it's strength. A major part of the dinar narrative centers around the idea of a sudden revaluation, a reset, or a dramatic overnight shift. It's an appealing scenario, especially for those who have waited patiently, but any serious discussion has to ask how that would occur in practice. Who authorizes it? What economic conditions support it? How would global markets respond? Large currency adjustments are not isolated events. They ripple across banking systems, trade relationships, and international agreements. Without those foundations in place, the scenario remains a possibility, not a probability. Another important factor that often gets overlooked is human behavior. Even in markets that do produce significant gains, most people do not capture the full move. They sell early, they secure partial profits, or they step out when uncertainty rises. That's not failure, that's reality. If the dinar were to appreciate meaningfully, the outcome for each holder would still depend on timing, access to liquidity, and personal decision-making under pressure. The size of the opportunity is only one part of the equation. Execution is the other. There's also a critical distinction between possibility and likelihood. Yes, it is possible for a currency to strengthen over time. Iraq has resources, strategic importance, and ongoing economic development efforts. But possibility does not guarantee scale, and it does not guarantee timing. A smart approach asks how often similar outcomes occur, under what conditions they happen, and what the most common results tend to be. That kind of thinking replaces guesswork with perspective. For many in the dinar community, especially those who served, this investment carries more than financial meaning. It represents hope for stability, a second chance, or a reward for patience. That human side matters, and it deserves respect. But it should not replace analysis. A strong belief does not move exchange rates. Policy, production, fiscal discipline, and global confidence do. Keeping that distinction clear is what protects people from being misled. Due diligence in this space is not complicated, but it does require honesty. It means asking what evidence actually supports the claims being made. It means noticing whether the narrative has evolved or simply repeated itself over time. It means looking at Iraq's central bank actions, monetary policy, and economic reforms, instead of relying on unnamed sources or vague timelines. If a claim cannot be tested or verified, it should not be treated as a foundation for financial decisions. There is also the question of opportunity cost, and it's one that deserves attention without judgment. Money that sits in one place for years is money that isn't working elsewhere. That doesn't make the decision wrong, but it does mean the full picture includes what was gained, what was missed, and what may still lie ahead. Mature investing is not about regret, it's about clarity. Understanding the cost of waiting helps you make better decisions going forward, regardless of what happens next. None of this means the dinar should be dismissed outright. It means it should be viewed clearly. It may represent a speculative position with a long timeline and uncertain outcome. For some, that may be acceptable as a small part of a broader financial plan. What becomes dangerous is treating it as a guaranteed event or a primary strategy for financial security. That's where expectations and reality begin to separate. For U.S. veterans especially, the mindset that works best here is the same mindset that worked in service. Stay alert, verify information, avoid noise, and make decisions based on evidence, not emotion. There is nothing wrong with holding a position and watching how events unfold. There is something wrong with relying on promises that cannot be backed up. So when the question comes up again, is this a path to millions or just a long-standing story? The most honest answer sits in the middle. There is potential, but there is also significant uncertainty. The outcome depends on factors far beyond any single prediction or timeline. That's not a popular answer, but it's a useful one. If a meaningful shift ever does occur, the people best positioned to benefit will not be the loudest voices or the most emotional believers. They will be the ones who stayed grounded, managed risk, and kept their expectations aligned with reality. And if that shift never comes in the way some expect, that same discipline will protect them from making bigger mistakes. At the end of the day, this is not just about a currency. It's about making clear-headed decisions in a space filled with noise. Stay informed, stay skeptical of easy promises, and make sure your financial future is built on more than one possibility. That approach doesn't eliminate hope, it puts it in the right place. And in a story like this, that balance is what matters most.